If you're over 60 and still driving, the rules of the road may be changing faster than you realize. Across the United States, quiet policy shifts are turning routine renewals, medical checkups, and even minor fender benders into expensive problems. Many drivers only discover these changes after fines appear, insurance rates jump, or licenses are suddenly restricted. What used to be simple paperwork can now drain savings and disrupt independence. Staying informed is no longer optional. The difference between preparation and surprise can mean hundreds, sometimes thousands of dollars each year. Number 1. Mandatory more frequent license renewals after age 60. Across the United States, state motor vehicle agencies are shortening license renewal cycles once drivers reach their 60s. Instead of renewing every 8 or 10 years, many older drivers now face renewals every 2 to 5 years. Lawmakers justify this shift using traffic safety data showing gradual changes in vision, reaction time, and flexibility with age. While the rule is framed as a safety measure, it quietly increases costs for older drivers who must repeatedly pay renewal fees, schedule appointments, and manage paperwork far more often than before. These shorter renewal windows create financial pressure that many people do not anticipate. Each visit can involve fees for license processing, new photos, vision screening, and supporting documents. Transportation costs add up, especially for drivers who must travel long distances or rely on rides. Time itself becomes an expense when renewals require weekday appointments, long waits, or multiple visits due to missing paperwork. For working seniors or caregivers, missed work hours translate directly into lost income. Over several years, what once felt like a routine errand can quietly turn into a recurring and expensive obligation tied solely to age. This change also increases stress and confusion for drivers navigating evolving state rules without clear notice or consistent communication from licensing authorities nationwide today for many residents. There are practical ways to reduce the financial impact of frequent renewals. Mark renewal deadlines well in advance and confirm requirements directly through official state websites. Scheduling appointments early helps avoid late fees or expired license penalties. Drivers should gather medical and vision records beforehand to prevent repeat visits. Where allowed, choosing off-peak appointment times can reduce delays and stress. Some states still offer partial online processing for older drivers, which can save both money and time. Number 2. In-person renewal requirements, expanding. Many states are scaling back remote renewals for drivers over 60 and requiring face-to-face visits at licensing offices. Agencies cite safety reviews showing that brief, in-person checks help confirm identity, eyesight, and physical readiness to drive. The policy shift sounds minor, yet it changes the renewal experience dramatically. What was once a quick online transaction now involves scheduling, travel, waiting lines, and document checks. For older drivers, these steps introduce new barriers that younger drivers often avoid, even when driving records are clean and unchanged. Verification procedures also vary by state, creating confusion when rules change without notice and forcing drivers to research requirements before every renewal cycle each year nationally. The financial impact grows through indirect expenses that rarely appear in official fee schedules. Travel costs rise when offices are farther away or public transportation is limited. Parking fees, fuel, or ride services add up quickly. Time spent waiting becomes costly for workers, caregivers, and self-employed drivers who lose billable hours. Missed appointments caused by illness or paperwork errors can require repeat visits, doubling expenses. States argue uniform enforcement, yet inconsistent county staffing leads to uneven wait times. The rule therefore functions like a quiet surcharge applied through logistics rather than fines. Rural residents are hit hardest because fewer offices serve wider regions, multiplying travel distance and appointment scarcity for aging drivers on fixed incomes often. Drivers can limit damage by preparing strategically. Booking appointments weeks ahead reduces repeat trips and late renewals. Bring multiple proofs of address, current insurance, and vision prescriptions to avoid rescheduling. Choosing midweek mornings often shortens waits. Some states allow hybrid renewals where paperwork is submitted online before the visit, cutting time on site. Community senior centers sometimes host mobile licensing days, eliminating travel costs. Staying informed through state bulletins helps drivers anticipate changes early. Number 3. Mandatory vision tests starting at lower age thresholds. States are lowering the age at which vision screening becomes compulsory during license renewal, with many triggering tests at 60 or 65. Agencies point to crash analyses linking reduced visual acuity, contrast sensitivity, and glare recovery to higher collision risk. The screenings themselves are brief, yet they reset expectations for older drivers by making eyesight a recurring compliance checkpoint. What once happened sporadically now occurs at nearly every renewal, changing the rhythm of driving life and adding new steps that must be planned, documented, and verified before a license is issued or extended. Costs accumulate beyond the test administered at the counter. Many drivers are referred for full eye exams to document corrective needs, generating copays, specialist fees, and prescription updates. New lenses or frames may be required sooner than expected, and insurance coverage varies widely. Transportation to clinics adds expense, especially where providers are scarce. Delays can trigger temporary licenses or repeat visits, multiplying fees and time away from work or caregiving. Even drivers who pass face indirect costs when glare or contrast results prompt night driving restrictions that affect insurance pricing. The rule therefore operates as a cascade, where a simple screen can unlock several downstream expenses. Preparation reduces friction. Schedule a comprehensive eye exam well ahead of renewal to identify issues early and align prescriptions with state standards. Bring documentation showing recent exams and corrective compliance to avoid referrals. Ask providers about anti-glare coatings and contrast-enhancing lenses that address common screening flags. Keep digital and paper copies of results for quick submission. If night driving limits are proposed, request clarification on appeal options and retesting intervals. Planning appointments during off-peak hours shortens waits. Staying proactive transforms vision testing from a surprise cost into a predictable maintenance task, preserving mobility while controlling expenses and administrative burden for older drivers across diverse communities nationwide today. Number 4. Medical reporting laws quietly expanding. Several states have broadened rules that allow or require healthcare providers to report medical conditions that may affect driving ability. These policies are often justified using public safety research on seizure disorders, cognitive decline, sleep disorders, and uncontrolled diabetes. What makes this change costly is that reporting does not automatically mean license loss, but it can trigger reviews, temporary suspensions, or additional testing. Many drivers first learn about the rule only after a report has been filed, turning routine medical care into an unexpected administrative and financial problem. The expenses tied to medical reporting add up quickly. Drivers may be required to pay for specialist evaluations, medical clearance forms, or functional ability tests. Insurance coverage for these assessments is inconsistent, leaving many costs out of pocket. While a review is underway, some states issue temporary restrictions that limit driving hours or distance, forcing drivers to rely on paid transportation. Missed work, delayed appointments, and repeated paperwork submissions quietly drain income. Even when clearance is granted, reinstatement fees and follow-up reporting deadlines create an ongoing cycle of compliance that did not exist before. Drivers can reduce risk by staying organized and proactive. Keep updated records showing treatment compliance and condition stability. Ask physicians how state reporting rules apply before appointments that may trigger evaluations. Request copies of all submitted forms and track deadlines carefully. If a review is initiated, respond promptly and consider seeking a second medical opinion when allowed. Some states permit conditional licenses during review periods, preserving mobility while requirements are met. Understanding these rules early helps drivers protect both independence and finances, preventing medical oversight from becoming an unexpected penalty tied to continued mobility. Families can assist by organizing documents, monitoring deadlines, budgeting for evaluations, and planning transportation options during temporary restrictions periods. This preparation reduces stress and prevents last-minute decisions that can escalate costs unnecessarily for households. Awareness allows drivers to maintain control, comply calmly, and avoid penalties that stem from confusion rather than actual safety risks over time across multiple renewals and reviews nationwide today, quietly expanding. Number 5. Cognitive screening added to license renewals. States are beginning to pilot cognitive screening during license renewals for older drivers, often starting in the early 60s. These screenings are not full neurological exams, but short assessments measuring memory, attention, and reaction speed. Transportation agencies cite studies showing that slowed decision-making can affect complex driving situations such as intersections and lane changes. While officials frame this as preventative, the screenings introduce a new checkpoint that can trigger further evaluations, even for drivers with long, accident-free records and decades of experience. The financial consequences appear after an initial screening flag. Drivers may be required to schedule cognitive specialists, occupational therapy evaluations, or on-road tests, each carrying separate fees. Many insurance plans do not cover driving-related cognitive assessments, leaving costs fully out of pocket. During the review process, licenses may be restricted or suspended, increasing dependence on paid transportation. Missed work hours, caregiver coordination, and repeated testing appointments compound the burden. A single flagged screening can therefore lead to months of expenses and uncertainty, even when final approval is granted and driving privileges are restored. Preparation helps limit disruption. Practicing memory and reaction exercises before renewal can improve confidence and performance. Drivers should ask licensing agencies which screening tools are used, and whether retesting options exist. Bringing medical documentation that demonstrates stable health and daily functioning may reduce referrals. If a screening result seems inaccurate, appeal processes and second evaluations are sometimes permitted. Planning financially for possible assessments prevents sudden strain. Cognitive screening does not automatically end driving, but awareness and preparation keep the process from becoming an unexpected financial spiral that threatens independence and mobility. Families can support by attending appointments, organizing paperwork, and monitoring deadlines. Number 6. Insurance premium surcharges after age 60. Auto insurance pricing is shifting as insurers rely more heavily on age-based risk modeling. Even drivers with clean records are seeing higher premiums once they pass 60, driven by actuarial data linking age to claim severity rather than accident frequency. Companies argue this reflects repair costs and injury outcomes, not driving skill. The result is a quiet surcharge that appears at renewal without a ticket or violation. Many drivers only notice after rates jump, and shopping for alternatives often reveals similar pricing across providers, reinforcing the age-related increase nationwide, regardless of mileage, location, or long-term loyalty. These premium hikes strain budgets over time. Annual increases of a few $100s compound, especially for fixed-income households. Discounts that once offset costs are reduced or capped, while mileage-based savings may not apply to retirees who still drive regularly. Claims history matters less than demographic profiling, making it harder to earn lower rates through behavior alone. Some policies add fees for medical coverage assumptions tied to age, further inflating costs. When combined with registration, fuel, and maintenance, insurance becomes one of the largest ongoing expenses of continued driving after 60, forcing many households to reconsider travel habits, trip frequency, and even vehicle ownership decisions. Drivers can respond strategically. Completing state-approved defensive driving courses often unlocks measurable discounts for multiple years. Reviewing coverage limits and deductibles can rebalance premiums without sacrificing essential protection. Comparing quotes annually remains worthwhile, especially through independent agents who access multiple carriers. Bundling home and auto policies may restore savings lost to age surcharges. Maintaining excellent credit, where allowed, also influences pricing. While age-based models persist, informed adjustments keep insurance from quietly draining finances. Number 7. Telematics and driving monitoring discounts that backfire. Usage-based insurance programs are expanding rapidly, promising savings by tracking driving behavior through smartphone apps or vehicle devices. For older drivers, enrollment is often encouraged with marketing that highlights safe habits and lower mileage. However, the scoring models frequently penalize patterns common among seniors, such as cautious braking, slower acceleration, or daytime congestion exposure. These systems prioritize algorithmic thresholds rather than context, turning everyday defensive behavior into negative scores. What appears as a discount opportunity can quickly become a financial liability once monitoring begins. Costs surface when monitored data triggers rate adjustments. Hard braking alerts may occur during necessary avoidance maneuvers, while cornering scores can drop due to urban road design. Night driving penalties sometimes apply even for early evening trips, and short, frequent drives can reduce efficiency scores. When trial periods end, premiums may rise above original rates, and exiting programs does not always restore prior pricing. Data disputes are difficult, requiring appeals that rarely succeed. The result is higher annual costs paired with ongoing surveillance, adding stress and eroding savings that drivers expected from participation. Drivers should evaluate carefully before enrolling. Request written explanations of scoring criteria and penalty thresholds. Ask whether opting out restores previous rates or locks in changes. Consider declining programs if driving patterns include frequent stops, dense traffic, or variable schedules. If already enrolled, adjust trip timing where possible and review weekly reports to catch scoring issues early. Comparing non-telematics policies annually can reveal better options. Understanding how data is interpreted prevents marketing promises from translating into long-term expense. Informed decisions preserve control, privacy, and predictable costs while maintaining mobility without hidden penalties for cautious driving habits across diverse communities nationwide today, while protecting budgets, reducing stress, maintaining autonomy, and avoiding technology-driven pricing traps that quietly escalate expenses over time for aging motorists. Number 8. Stricter retesting after minor accidents. States are tightening policies that require older drivers to undergo retesting after even low-damage accidents. These incidents may involve parking lot collisions, slow-speed fender benders, or single-vehicle scrapes that once ended with an insurance claim and no further action. Updated safety reviews now treat minor crashes as potential indicators of declining reaction time or awareness. For drivers over 60, a simple report can automatically trigger written tests, road exams, or medical reviews, regardless of fault or driving history. The financial impact unfolds quickly. Retesting often comes with exam fees, vehicle inspection costs, and possible instructor charges. If a license is temporarily suspended during evaluation, drivers must rely on paid transportation, increasing daily expenses. Missing work, medical appointments, or caregiving duties adds indirect costs that strain household budgets. Insurance premiums may rise simply because a retest was required, even if the driver passes. Repeated appointments, paperwork errors, and delayed scheduling can stretch the process over weeks or months. What begins as a minor incident can quietly turn into a prolonged and expensive compliance cycle that many drivers never anticipated. Preparation and response timing matter. After any accident, request official reports immediately and review them for errors. Correcting inaccuracies early can prevent unnecessary retesting referrals. Keep documentation showing prior clean driving records and recent vision or medical clearances. If retesting is ordered, schedule exams promptly to minimize suspension periods. Some states allow independent driving evaluations as alternatives to DMV testing, which may offer flexibility. Understanding appeal rights and retest intervals helps drivers avoid repeated fees. Staying calm, organized, and proactive limits the financial ripple effect of stricter retesting rules. Awareness ensures that a minor accident does not escalate into a long-term burden threatening independence, mobility, and financial stability. Families can assist by coordinating transportation, organizing paperwork, and tracking deadlines. Number 9. Reduced grace periods for expired licenses. States across the country are shrinking or eliminating grace periods that once allowed drivers to renew licenses shortly after expiration without penalties. For drivers over 60, this shift is especially costly because renewals are already more frequent and often tied to medical or vision requirements. Missing a deadline by even a few days can now result in citations, fines, or temporary loss of driving privileges. Licensing agencies justify the change by emphasizing enforcement consistency, yet the practical effect is a narrow margin for error that disproportionately affects older drivers managing complex schedules. Financial consequences appear immediately once a license lapses. Driving with an expired license can lead to tickets, court fees, and insurance complications if an accident occurs. Some insurers deny coverage for claims during expiration periods, exposing drivers to significant liability. Reinstatement may involve late fees, retesting costs, or in-person visits that add transportation expenses. For those relying on driving for work, caregiving, or medical access, even short suspensions disrupt income and daily routines. The policy effectively converts administrative timing into a financial risk, where a missed notice or delayed appointment carries real monetary penalties. Avoiding these costs requires structured planning. Set multiple reminders months ahead of expiration dates and confirm renewal eligibility early. Monitor mail and digital accounts carefully, as notices are sometimes delayed or sent electronically. Keep required documents updated to prevent last-minute rescheduling. When travel or medical issues arise, renew early rather than waiting for deadlines. Some states allow temporary extensions if requested before expiration, reducing penalty exposure. Staying organized transforms reduced grace periods from a trap into a manageable requirement. Awareness protects budgets, preserves mobility, and prevents small oversights from becoming expensive setbacks. Number 10. Higher penalties for driving without updated medical clearance. States are increasing penalties for drivers who continue driving after a medical clearance requirement has expired or is under review. These clearances are often tied to conditions such as heart issues, diabetes management, sleep disorders, or neurological monitoring. What makes this change risky is that many drivers are unaware their clearance has a deadline separate from license expiration. Once the date passes, driving becomes a violation, even if the individual feels healthy and capable. Enforcement agencies justify stricter penalties by citing accountability and public safety, but the burden of tracking compliance falls entirely on the driver. The financial fallout can be severe. Penalties may include steep fines, points on driving records, and immediate license suspension. If an accident occurs during an expired clearance period, insurance companies may deny coverage, leaving drivers personally responsible for damages. Reinstatement often requires new medical evaluations, specialist visits, and administrative fees, many of which are not covered by insurance. Transportation alternatives during suspension add ongoing costs, while missed work or caregiving responsibilities amplify losses. What begins as a paperwork oversight can escalate into thousands of dollars in combined expenses, threatening financial stability and independence for older drivers. Managing this risk requires deliberate organization. Track medical clearance dates separately from license renewals and set reminders well in advance. Keep copies of approval forms both digitally and in the vehicle when allowed. Schedule follow-up medical appointments early to avoid gaps caused by provider availability. If a condition is stable, request longer clearance intervals where permitted. Respond immediately to agency notices and confirm receipt of submitted documents. Families can help by monitoring deadlines and assisting with appointment scheduling. Proactive planning turns medical compliance into a routine task rather than a costly emergency. If this information helped you see the road ahead more clearly, like the video, subscribe for future updates, and share it with someone who still drives after 60. Comment below if any of these changes surprised you or if you've experienced them firsthand. And don't forget to check out our related videos for more practical guidance on staying mobile, informed, and financially protected in today's changing driving landscape. 3. USA Driving Changes 2026. 10 new rules for drivers. 60 plus. That could drain your wallet.